All right, the Fed's two-day policy meeting kicks off today. Senior economics reporter Steve Leisman joins us right now. He's got the CNBC latest Fed survey. Steve, what's it show?
Well, Becky, good morning. Despite improvement in the economic outlook, respondents to the Fed survey continue to forecast weaker growth and higher inflation than they did at the beginning of the year and still elevated tariff uncertainty. 100% say the Fed will keep rates unchanged at this meeting. The recession probability, though, did drop by 3 points to 38%. It had been as high as 53%, but now it's down quite a bit, but still elevated. 3.9%, that's the year-end Fed funds rate, so still banking on 2 rate cuts this year. But they've kind of X'd out one for next year at 3.55, only 1 rate cut built in, and the Fed will remain above that long-run neutral rate of 3.3%, which is the estimate of respondents here. GDP, 1.13%. That's up. That's a good thing from 0.8, but it compares with the forecast we had from January, which was 2.4%. 2026, we get back to at or above trend at 2.2%. That's 20 basis points higher than the May forecast. Doug Gordon, senior portfolio manager with Russell Investments, writes in saying, quote, recent geopolitical events in the Middle East add uncertainty into an already uncertain environment on trade, tax policy, and with potentially weakening hard macroeconomic data pending. 2025 forecast for inflation down a bit, down a quarter point, but still elevated at 3%. 2026 is when you get back to around where the Fed would be comfortable on the CPI at 260 in May. The unemployment rate also down a bit, 4.53, 4.5%, call it. That's down a couple tenths from where it was in the prior forecast. And unemployment in 2026, 4.47%. Mark Vittner, he's upbeat. He's the chief economist at Piedmont Crescent Capital. He says the economy has remained resilient, not terrified. There's no shortage of reasons to worry, but the U.S. economy keeps proving its doubters wrong. On a separate note, more volatility could be ahead, with most expecting an early announcement of Fed Chair Powell's replacement from President Trump. 64% say yes, a replacement for Powell will be named before the end of the year. 21% say no, and 14% don't know. Underlying many of these forecasts is the expectation that tariff impacts have yet to really hit the economy, along with disagreement over how much impact the big tax bill in Congress will have on growth. Both major swing factors in the growth, employment, and inflation outlooks for the year, of course, along with what the Fed ends up doing, Becky.
Steve, why are the GDP forecasts so much lower for this year? It's the uncertainty around all of these policies or something else?
Actually, your question has both answers in it, right? It's uncertainty in and of itself, and it's the policy. So it's the idea that basically they believe that tariffs will reduce GDP by some amount. There's disagreement in there, but there's that idea, plus layer in the uncertainty. And we did ask the question about whether or not we think we sort of dodged the bullet on tariffs, and most say no. Most say that there will be more significant impacts from the tariffs in the months ahead. If they end up being wrong, then, well, maybe the GDP numbers go up. They've been wrong before. They were wrong about consistently predicting a recession in the Biden years, and so they could be wrong here. They have backed off, though, their recession calls.
But the idea that growth bounces back in 2026 is because the tariffs only have a temporary impact on growth, or because they think the tariffs themselves are temporary?
I think it's awesome, Becky. You read the survey without even getting the survey. That's exactly what they say. We asked that question as to whether or not tariffs will be one-time price increases or have affected broader inflation, and a majority, I've got to look up the number, believe it will be a one-time price increase. So that's a bit of good news here, that they do not think that these tariffs end up having broader impacts either on other items that are not tariffs, or more broadly later on to keep increasing the rate of growth of prices.
Okay, that is interesting. Steve, thank you, and we will talk to you, I think, later today. Thank you.
Yeah, not just later. That's important, Becky. We have this 8:30
interview that's coming up.
Retail sales number and import prices coming up, and they're going to be really important for the outlook. You want to tune in for that.